TV18.
Good evening. Thanks very much for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking tonight. The RBI withdraws the 2,000 rupee note from circulation under its clean note policy, but says it remains legal tender. Announces a window from the 23rd of May till the 30th of September to exchange or deposit the notes. After widespread uproar, government reverses course on imposing 20% tax collected at source on all overseas credit card transactions. Says the 20% TCS will only apply on overseas transactions above 7 lakh rupees a financial year. The Supreme Court appointed panel report on the Adani-Hindenburg case is made public. The report says SEBI suspects links between the Adani Group and 13 overseas entities but needs more time to probe the matter. The report also says it cannot conclude there was any regulatory failure at this stage that caused undue volatility in the markets. The court-appointed panel also says no coherent pattern for abusive trade has come to light. SEBI told the panel it did not find any evidence of wash trades. Also says it's probing a build-up of short positions in Adani stocks prior to the Hindenburg report. RBI transfers around 87,400 crore rupees to the government as surplus for FY23 thanks to higher forex gains and dividends from PSU banks. The Reserve Bank also increases its contingency buffer to 6% after at least 2 years. SEBI proposes sweeping changes to mutual fund fees in a bid to bring down cost and increase transparency. Proposes to include all expenses, including brokerage and GST, within the ambit of expense ratio, which is the total fee charged to a mutual fund investor. Royal Enfield bites the EV bullet, plans to launch its first electric motorcycle by 2025. It's looking to invest up to 300 crore rupees from its FY24 capex. The company tells CNBC-TV18 they're building their first EV production line at their plant in Tamil Nadu. That's an exclusive. Jet Airways revival looks even more uncertain as the air operator's certificate that expires today. Sources say Jalan Kalrock Consortium is not applied for an AOC renewal. It's also not eligible for a renewal. In a setback for SpiceJet, the Director General of Civil Aviation deregisters 3 aircraft used by the airline. SpiceJet says this will not hit operations. Zomato's losses narrow to 188 crore rupees in Q4 as revenues jump 70%. The company says it's turned EBITDA positive on an adjusted basis, excluding the quick commerce subsidiary Blinkit. The G7 summit kicks off in Japan with a focus on the Ukraine war and China tensions. Prime Minister Modi arrives in Hiroshima as a special invitee, says India stands firmly on the side of peace. Well, it is turning out to be a busy Friday evening. The top story this evening, the 2,000 rupee denomination note that was introduced by the Reserve Bank of India when the government announced its demonetization decision on the 8th of November 2016 will now be withdrawn from circulation. However, it will continue as legal tender. The RBI said that the 2,000 rupee note was introduced during the time of demonetization, primarily with the objective to meet the currency requirement of the economy in an expeditious manner, because we had seen the withdrawal of the legal tender status of all 500 and 1,000 rupee banknotes in circulation. There was no other way to fill in that gap. The Reserve Bank now says that the objective has been met. The RBI in its statement highlights that it has encouraged the exchange or deposit of the 2,000 rupee notes before September 30th, 2023. The exchange window will start from May 23rd and will be open till the 30th of September. Further, the central bank has highlighted that one can exchange the 2,000 rupee notes up to a limit of 20,000 rupees at a time. So the exchange can happen, but in a tranche of 20,000 rupees at a time. The exchange facility will not be charged.
1,000 rupees note was used to make the demonetization process facilitate, because there was no other note available at that time of 500 or 1,000 rupees. Effectively, all the notes which were in circulation were printed before July 2017. There might be a small number of leftover paper which might have been printed in 1819, but that is too small to be of any real consequence. And from that time onwards, the the 2000 rupee note has increasingly gotten withdrawn from the process.
That yes, this is the last nail in the demonetization exercise. When we started the demonetization exercise, there's a particular section in the RBI Act, section 24(1), in terms of which we introduce notes, or we withdraw notes. But when there was demonetization, we could not immediately replace the entire currency by volume. But what we could do was we could replace it by value. After a while, we realized that for retail, this is not really working.
All right, to take this conversation forward, we're now joined by Sunil Mehta, the Chief Executive at the Indian Banks Association. Mr. Mehta, many thanks for joining us here on CNBC-TV18. In many ways, this is the culmination of an exercise that began on the 8th of November 2016. The 2,000 rupee note came to existence during the demonetization phase, and this, in a sense, is closing off that chapter with the demonetization exercise also concluding. Now, I want to understand from you, Mr. Mehta, the Reserve Bank has made it clear that the circulation of the 2,000 rupee note has been declining from its peak as on March 31st, 2018. It was almost 37% of notes in circulation. It's now down to about 11% of notes in circulation. The RBI has also kept open that exchange facility starting the 23rd of May till the 30th of September. So explain to me now what happens, for instance, if I choose not to exchange and the 30th September deadline ends. What happens to the 2,000 rupee note I may have?
So now one thing is clear, because the deadline has already been given by the RBI, and till that time the legal tender of this 2000 currency note is there. So RBI can choose to extend the date, or RBI can choose to close this. If they think that the entire money has already been deposited and money has come back to the system, they can decide about non-continuation of 2000 rupees as a legal tender. So it is in the interest of the general public that they should get it either exchange or deposit in their account. Till then, even they can use it for payments also, as already narrated in the FAQ section of the RBI communication.
Absolutely. And in fact, I want to emphasize that because as Mr. Mehta was clarifying, that is the important clarification from the RBI in its FAQ as well. The 2,000 rupee notes will continue to be legal tender. No deadline has been mentioned to avoid causing panic and also to encourage the public to finish the exchange by September of 2023. Now, Mr. Mehta, the window for the exchange facility opens on the 23rd of May. What we're given to understand, and the RBI makes it clear, that you can exchange 20,000 rupees at one time, so a tranche of 2,000 rupees in 20,000 tranches at one time. But there's no such limit as far as deposit is concerned, correct?
Yes, there is no such limit, and FAQ, they are right that any account which meets out the basic regulatory requirement of a KYC and totally seeded with a PAN number and having other regulatory meet out all the requirements, they can deposit in any amount. There is no such restriction or amount ceiling for depositing in their individual account.
Right. So, Mr. Mehta, as we pointed out, this was on account of filling that vacuum that came in when we demonetized the 500 and 1,000 rupee notes, and in that sense, perhaps it has served its utility, served its purpose. We understand that the printing of the 2,000 rupee note was already stopped in 2018, 2019. So now, as far as banks and RBI's regional offices are concerned, it is going to be a busy next couple of months.
Obviously, because this exchange will require a lot of people who have money. Initially, people get panicked, so they will try to rush to the bank to get it exchanged. Or those who have the money, they would like to deposit it. So initially, there will be a more rush. But gradually, when the people will understand and that there is no restriction of it, it's only accepted for payments. So I think the circulation will continue, and bankers will have to gear up and provide some extra efforts and manpower to handle the situation of exchange. But the situation may not be as as serious as it was in the time of demonetization, because the circulation has already reduced substantially, And the second important aspect is now this facility is extended even through banking correspondent. So even in rural area, a person can get exchange 4,000 rupees from a banking correspondent. So the exchange facility is very widespread, and there is a large number of banking correspondent operating in the country. So people can definitely go and exchange it there. So definitely the banking system will have to gear it up to provide this additional facility at no cost, but I think it's manageable. It won't be a major challenge for any public.
Have you had conversations with banks this evening, sir, post the RBI circular?
No. I think the communication was quite recent, and we have yet to create a formal meeting of the banker. Informally, we are talking. We have a few of the banks, but as a formal meeting as a IBI is yet to happen.
Okay, a formal meeting of the IBA yet to take place. But Mr. Mehta, I appreciate you joining us here on CNBC-TV18. And once again, for the benefit of our viewers who are joining in, this is not demonetization. What has happened is that the Reserve Bank is saying that it will no longer be in circulation. It's being withdrawn from circulation. It will continue as legal tender. You have a window between the 23rd of May to the 30th of September. The Reserve Bank is encouraging people to deposit or exchange their currency, the 2,000 rupee denomination, into other denominations between that time period. So that is the decision that's come in from the RBI when it comes to the 2,000 rupee note. But there's been another big development, and after widespread uproar, the government has decided to reverse its course on imposing a 20% tax collected at source on all overseas credit card transactions. The government has now said that the 20% TCS will only apply on overseas transactions above 7 lakh rupees in a financial year. Sapna joins us now with more. Sapna, we've been reporting this for the last few days. There's been massive backlash, consumers saying that this was a tax on the honest taxpayer. This was going to make life very difficult. This was against the principles of the ease of doing business. The government course-correcting.
Absolutely. In fact, the government has taken serious note of the kind of feedback that has come. And I think in our discussions also, we were primarily focused on the fact that this is going to be a huge inconvenience as far as a small taxpayer is concerned, as far as this, that the salaried class is concerned, most likely. So keeping all of this in mind, up to 7 lakhs, up to 7 lakhs of, payments in foreign exchange using your international debit and credit cards, that is not going to be part of your liberalized remittance scheme. So once that's not part of the LRS, the TCS is also not going to be applicable. Now, why the 7 lakh limit? If you look at the budget closely, your health spend and your education spend, which the limits over there are 7 lakh. Up to 7 lakh, there is no TCS on that front. Beyond 7 lakhs, there is a 5%, and there is a, there is a very limited 0.5% in terms of your education loan, so on and so forth. So I think keeping that in mind and trying to give this big relief signal to the common taxpayer, to the honest taxpayer, the government has gone and done this. What about beyond 7 lakhs? Definitely beyond 7 lakhs, your 20% TCS is going to be applicable, and quite possibly, in the liberalized remittance scheme, that they will issue it separately. They will notify the changes separately. They might have to say that, it's not only up to 7 lakhs is exempt. Beyond that, I think the LRS will still be applicable. So that's something we need to keep in mind.
Good sense has prevailed finally, and because it was a big handicap for the small and medium class people, and now I think it will be a big relief, because individuals are sending money for hospitals, for medical treatment, for admissions and other things. So it will be a big relief to them, and it will also is a good relief for the honest income taxpayer.
More than 90%, 95% of cases, the income transfer is, or the LRS transfer is from the legally earned income. Subjecting 95, 97% of the people who are genuinely using LRS for making transfers and putting them to the this rigor or unnecessary procedural hassle of going through the TCS rules, I think is absolutely unnecessary. That should also be withdrawn.
So that was a big issue that was causing a lot of consternation, and the government now withdrawing that decision of imposition of a 20% TCS on credit card transactions. The other big story, the Reserve Bank of India has announced a surplus transfer for about 87,400 crore rupees to the government for FY23. This is the highest surplus transfer since the 99,000 crore rupees was transferred in FY21. The higher surplus is due to higher earnings on the sale of forex. RBI would also have had higher payouts due to SDF rates. PSU banks also reported higher profits, which would mean higher dividends. The RBI board has also decided to keep the contingency buffer at 6%. The Bimal Jalan committee mandated the RBI to keep the contingency buffer at 5.5% to 6.5%. So far, the RBI had kept its buffer at 5.5%, but now it's decided to increase that to 6%. Market experts say the surplus transfer is in line with expectations.
I would tend to think it's slightly better than our expectations because we were looking at a number of around 65,000 crores. I know in the market there were quite a few dealers who were expecting to be above 1 crore, so 1 lakh crores rather. So which means that the very fact that the bond yields have gone up after the announcement of 87,000 crores, it does mean that probably the market was expecting something more. But I think from the point of view of the Government of India, I think the transfer is definitely much higher than what was budgeted for in the union budget. And the RBI has actually made up more than what was required. So there's a 40,000 surplus. On the whole, I think it's very good news for the Government of India.
And the big corporate story, the report by the Supreme Court appointed panel on the Adani-Hindenburg matter has been made public. Before we get into the details of the report, let's tell our viewers what the task was of the committee that was headed by Justice Sapre. Now, here's the remit of the committee. The committee was to assess factors which caused volatility in the market. It was also to suggest measures to strengthen investor awareness and investigate potentially regulatory failure. That was what the Supreme Court asked the committee to do. Now, in its report, the Supreme Court appointed committee says that SEBI suspects links between the Adani Group and 13 overseas entities, but the market regulator needs more time to probe. Remember, this is what SEBI has told the Supreme Court in its recently filed affidavit as well. The report also says it cannot conclude that there was any regulatory failure at this stage that caused undue volatility in the markets. Ashmit joins us now with more details of the Supreme Court appointed panel's report. Ashmit, it's a over 170-page report, but let's address the key issues that the Supreme Court appointed panel was asked to look into. And let's start by addressing the issue of minimum public shareholding, an issue that SEBI has also reiterated in its affidavit to the Supreme Court.
Indeed, the expert committee does go into this issue of how SEBI fared with respect to probing these allegations of minimum public shareholding norms. Now, as far as MPS norms are concerned, SEBI identifies 13 overseas entities which hold Adani stock, and the suspicion that has been expressed by SEBI is that there is possible linkage between these 13 overseas entities and Adani promoters. However, in the same breath, the expert committee records submissions on oath by both the Adani Group as well as these 13 overseas entities that there is no linkage, there is no connection between the two of them. Having said that, the expert committee does record that the Hindenburg report has only furthered the suspicions that have been harbored by the market regulator. However, it also records that mere suspicions, however strong, cannot replace the need for proof, cannot replace the need for evidence, and further then goes on to record that SEBI has been unable to develop these suspicions into a prosecutable case against the Adanis, and further says that SEBI seems to have drawn a blank, seems to have quote-unquote hit a wall with respect to its investigations into the ultimate beneficial owners of these overseas entities, even after roping in the CBDT as well as the ED. But nonetheless, the overall assessment is that there is no case of a regulatory failure by SEBI.
All right, that's as far as the minimum public shareholding issue is concerned. Let's address the issue of price manipulation, Ashmit, and what the committee says in its report on record on that front.
Well, the expert committee makes some very interesting findings. Number one, it records the submission by SEBI. SEBI says that technically, at least as far as related party norms are concerned, technically the transactions in question which have been marked out and alleged, they may be kosher, they may be good on paper as per the letter of the law, but may not be in compliance in spirit of the law. Now, in response to this, the expert committee gives its own findings. The expert committee says, look, these requests, these complaints that were raised came way back in June of 2020, subsequent to which SEBI remodeled some of these regulations in November of 2021, the catch being that these November 2021 rejig came into effect in April of 2022 and April of 2023. This is where the expert committee says that as a best industry practice, it's advisable for SEBI to look at these enforcement actions prospectively, to not look at it retrospectively, essentially saying that pre-November 2021 transactions should not be gone into by the market regulator. Further, the expert committee takes it a step further and says that even if these regulations were already in place for the transactions in question, the expert committee says that there should be, in terms of time, some degree of proximity between when the transaction took place and when the enforcement action is taking place, essentially saying that you can't have a transaction going back to 2016 and 17 and having an enforcement action, having corrective action all the way back in 2023. And again, the conclusion is no regulatory failure at this stage.
Okay, so that's as far as related party transactions is concerned. But the committee has also stated on record that SEBI has found that there has been no coherent pattern of abusive trading. Take us through what it states there.
Well, on price manipulation, there are two key takeaways as far as the expert committee. Number one, SEBI records that, in fact, makes its submissions before the expert committee that there were, in fact, some transactions which did invite the attention, the investigation of SEBI. There were investigations, but importantly, SEBI says, and the expert committee records this as well, that despite oversight in terms of these transactions that were raised, there was no wash trades that were identified by SEBI. And in fact, that was the very remark that the expert committee also makes, that there is no coherent pattern of abusive trade that has come to light to the market regulator. And that's the first key takeaway. However, on the second question, on whether or not there were suspicious trades pre and post Hindenburg report, this is where SEBI makes its submission, and the expert committee takes it on record as well, that prior to the Hindenburg report getting published, there were short positions that were taken with respect to some of these Adani stocks. 6 overseas entities have been identified for placing these short positions, and that is an ongoing SEBI investigation, that SEBI is looking into some of these short trades that were developed just prior to the Hindenburg report.
The net conclusion of the report is completely in favor of the Adani Group. The report has found that there is no stock price manipulation by the Adani Group. It has also found that there is no violation of related party transactions. It has also found that minimum public shareholding requirements of SEBI are well maintained and there is no violation.
Well, that is Mukul Rohatgi, the counsel for the Adanis. Now, SEBI has come out with a much-awaited consultation paper on total expense ratios in mutual fund schemes. The market regulator is hoping to reduce total expenses paid by investors and increase transparency. Shivani joins us now with more. Shivani.
Well, to put it simply, SEBI wants the term total expense ratio to mean just that, total expenses. It doesn't want AMCs to charge investors anything more than the TER. So the consultation paper proposes that TER will include several charges that mutual funds currently charge clients, from brokerage to transaction costs to commissions to even the goods and services tax. To this end, it has proposed a revised slab of the calculation of TER. It has also proposed that TER be calculated on the assets under management of the entire AMC instead of just the scheme. Also, the ratio itself will reduce as the AUM increases. So, for instance, an AMC with up to 2,500 crores in asset under management in its equity scheme can apply a total expense ratio of 2.55%, while one with the AUM between 2,500 crore to 5,000 crore can apply a TER of 2.45%, and so on. As things stand right now, a scheme with lower assets like smaller funds and NFOs charge higher expenses no matter which AMC launches these schemes. This new rule, if implemented, will put an end to that practice. Now remember, many fund houses also charge investors additional brokerages and transaction costs incurred when they execute trades. 0.12% of the trade value on cash market transactions and 0.05% of trade value on derivative transactions. This will also now get rolled up under the TER under the new proposal. The end result of these proposals will be that a new fund from a large AMC will have a much lower expense ratio than one from the smaller fund house. So not only will investor cost go down, it will give smaller and budding mutual fund houses support in fighting for their place in the industry.
Okay, Shivani, many thanks for joining us. We will head into a break, but up next, Royal Enfield bites the EV bullet. Exclusive details when we return. Well, here's a quick recap of the big story this evening. The Reserve Bank has announced the withdrawal of the 2,000 rupee note. However, it will remain legal tender. Here is the Finance Secretary, TV Somanathan, on the decision that's been taken by the Reserve Bank. And once again, for the benefit of our viewers, remember, this is not demonetization. So the 2,000 rupee note can be used tomorrow. The government and the Reserve Bank have also said that there is a window between May 23rd to the 30th of September where you can exchange or deposit the 2,000 rupee notes at your bank or at one of the 19 regional RBI offices. I'm reiterating once again, it is not as if you cannot use your 2,000 rupee note tomorrow. You can. What the Reserve Bank has done is said that it is going to withdraw the 2,000 rupee note from circulation. The printing, by the way, of the 2,000 rupee note had already stopped in 2018-2019. Take a look at the Finance Secretary.
It is no longer necessary. So it has served its need, and now it's time to move on to smaller denominations.
Sir, just for the clarification, what will happen after? Sir, 30 सितंबर के बाद क्या होगा सर इन नोट्स का? क्या RBI इस नोट्स को लेगा क्योंकि बैंक?
हाँ, ये तो अभी भी लीगल टेंडर है, तो इसमें कोई प्रॉब्लम नहीं है. अभी भी लीगल टेंडर है. It continues as a legal tender.
तो सर सितंबर 30 के बाद
ऐसे कई बार हुई है. You have had, one 500 rupee note was withdrawn some years ago for security reasons. So this has happened many times. This is not new.
सर इसे नोट डिमोनेटाइजेशन नहीं कह सकते, इसे क्या कहेंगे?
नहीं, ये डिमोनेटाइजेशन नहीं है. ये replacement of 2,000 rupee notes है.
Well, that is the Finance Secretary, TV Somanath. Another country's leading middleweight motorcycle manufacturer, Royal Enfield, is biting the EV bullet. Will launch its first electric vehicle motorcycle by 2025. Parikshit standing by with the details. Parikshit, Royal Enfield heading the EV route.
Yes, Royal Enfield, the maker of the iconic Bullet, the Classic 350, the Meteor and the Interceptor, is getting ready with its electric vehicle strategy. CNBC-TV18 has exclusively learned from sources that Royal Enfield will be investing about 300 crores in electric vehicle development, supply chain and production as well. At least 25 to 30% of the company's 1,000 crore capex allocation for FY24 will go towards electric vehicles. The company is looking to increase annual capital allocation towards electric vehicles in the coming years. The first electric motorcycle will be in the premium segment and is expected to hit the market by 2025. Royal Enfield has told CNBC-TV18 that a dedicated team of 60 professionals are working on the electric vehicle strategy and product portfolio as well. The first EV production line is coming up at the company's Vallam plant near Chennai. Eventually, Royal Enfield plans to consolidate all EV production at Cheyyar, where the company is building its third plant over a 60-acre plot. The Cheyyar plant is 20 kilometers away from existing plants of Royal Enfield. Eicher Motors is looking at an initial capacity of 1 lakh electric vehicles annually on a two-shift basis. The company has also said that they are not looking at raising any outside capital and they plan to utilize strong cash reserves initially. Royal Enfield, remember, had tied up with electric performance bike maker Stark Future of Spain in 2022. And the company is supporting RE with motor, battery technology and precision electronics as well. In fact, Royal Enfield CEO B. Govindarajan told CNBC-TV18, and I quote him, "We spent 2 years assessing the market and understanding what the customer wants from Royal Enfield. We are now in investment and execution mode and are establishing our supply chain. We promise to bring a disruptive, gorgeous motorcycle to customers by 2025. The CEO said Royal Enfield is currently setting up an electric vehicle production line at Vallam and eventually plans to consolidate EV production at Cheyyar plant. He also said that Royal Enfield has 1,100 retail outlets abroad and they are looking at expanding outlets in all countries where Royal Enfield has a presence. The CEO went on to say, and I quote him, "The addressable market is almost 1 million units outside India, of which our market share is 7 to 8%. And we see a huge headroom for growth. The international market is at an inflection point for Royal Enfield, and we see good growth in exports over the next decade." So that's a wrap of the electric vehicle strategy of Royal Enfield, and they're looking to launch their first premium electric motorcycle by 2025.
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
iPhone 14 Pro? Yeah, क्या डिस्प्ले है. Nice show by the way. लेकिन आप तो फ्लाइट में बोर ही होगे. What? See ना, एयरपोर्ट बस आने ही वाला है. And you haven't even downloaded anything. तो क्या ही करोगे? Watch people snow.
Not if I have Airtel 5G Plus.
So you've
already got it. Maybe you should get it too.
The fairest sex they call us. But the rules of the game, are they fair? You know we do have our skin in the game because we put everything at stake and believe in having and even eating our cake. Bold, aspirational, loud. Don't give us those labels. We're all unique, all valid and all worthy. Dreamers, doers and ceiling smashers. Standards and boundaries, we draw them. Stereotypes and self-doubt, we banish them. Equal pay for equal value. Let's create our destiny afresh.
HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC. Knowledge partner, Deloitte. Industry partner, FICCI. Associate partner, Reliance Industries Limited.
Once again, for the benefit of our viewers, let me recap the decisions that have been taken today. The 2,000 rupee denomination banknote stands withdrawn from circulation. It will continue as legal tender, so there is no need to press the panic button. You can continue to use the 2,000 rupee note tomorrow. There is no problem with that. And the Reserve Bank has opened a window from the 23rd of May till the 30th of September for the exchange and deposit. We now have with us the Finance Secretary, Mr. T.V. Somanathan, joining us to address a whole host of issues that we have been dealing with through the course of the last few hours. Mr. Somanathan, thanks very much for joining us. Let me start by talking to you about the decision to withdraw the 2,000 rupee denomination banknote from circulation. It will continue as legal tender. Now, we know that the printing of the note stopped in 2018-2019. Its circulation as a percentage of the currency in circulation is also down from the 35% at its peak to about 10% now. So why the pressing need for this decision at this point, Mr. Somanathan?
It's not a pressing need, but it's a need because this is a high denomination note. It had its utility at a particular point of time. That point of time has passed. And we have tremendous progress in digital payments. The need for such a high denomination for transactional use is no longer there. So it's an appropriate time to shift into lower denomination notes and increasingly into digital payments. So the number of these notes actually used currently in transactions is very limited.
Yes, I understand that it's down to about 10.8% as of the 31st of March 2023. But, you know, I just want to press on this issue of transactional use. You're saying that it has served its purpose, it's outlived its utility. It was born and came into existence on account of the demonetization exercise of 2016. But, you know, we've just gone through this period of a fair degree of volatility because of demonetization. You know, the economy at this point in time is going through a phase of recovery and repair. Was this the right time to go through with this? Because even as far as perception is concerned, Mr. Somanathan, it does unsettle people.
I don't think there's any comparison between this and demonetization. It continues to be legal tender. It will have virtually no, in fact, it will have no effect on the economy. I don't expect it to have, I think it is absolutely wrong to compare it with the demonetization. It continues to be legal tender. There are several months in which to hand it over.
I'm not comparing it at all, sir.
Transaction. Yeah.
Yeah.
So the impact.
No, I'm not at all comparing it with demonetization. In fact, we've been. Yeah.
I don't foresee any impact on the economy.
Okay. One clarification, Mr. Somanathan, because, the release from the Reserve Bank as well as the FAQ are not quite clear on that. I'm reading from the release of the Reserve Bank, point number 8. It says to complete the exercise in a time-bound manner and to provide adequate time to the members of public, all banks shall provide deposit and or exchange facility with the 2,000 rupee banknotes until the 30th of September 2023. Now, if someone was not able to avail of this exchange facility till September for whatever reasons, maybe they're not in the country, etc., what happens post that, sir?
I'm sure the Reserve Bank will have a proper system to handle this. I am not in a position to comment.
Okay. Mr. Somanathan, let me address the other issue, and this is, of course, an issue that the Finance Ministry has dealt with, and this is the imposition of the 20% TCS on credit card transactions. I mean, you're well aware of the fact that there has been an outpouring of feedback, of criticism, of the fact that this was actually opposite to the ease of doing business as well as the ease of living for the honest taxpayer. So the government has now decided to course correct and bring in changes to the 20% TCS imposition. That levy will now apply only if the transactions are more than 7 lakh rupees per financial year. But why was the decision brought in the very first place, Mr. Somanathan?
So there are two aspects here. It was never the intention to tax small transactions. We had, even in yesterday's clarification or yesterday's FAQ, stated that we would be issuing a clarification. So the intention has always been that all LRS transactions need to be properly accounted for, that credit cards should not be outside the LRS limits, that LRS usage beyond a certain threshold needs to be accounted for properly and to suffer a tax collection at source, because we have seen many instances of persons whose LRS transactions far exceed their disclosed incomes. And these are not a few cases, these are plentiful cases. So at the same time, we have no intention of inconveniencing people on small payments on their trips abroad and so on. And that's why the clarification has been given that it doesn't apply to payments up to 7 lakh rupees per annum. Now, as regards the larger payments that are made are tax collection at source. There are two possible cases. A person is paying taxes in accordance with his actual income, in which case this can be adjusted against advance tax payments every quarter. It can be adjusted against TDS, which an employer will deduct. It can be adjusted against self-assessment payments. So it should not affect, barring a slight working capital effect in the short run, that too for a very few months, it doesn't affect those who are paying their taxes, and it doesn't affect people whose transactions are less than 7 lakhs per annum. For those who are not paying their taxes, if they suffer a 20% TCS, I think that's legitimate.
Yes, I don't think anyone is arguing about those who are evading taxes and the impact or the implications for them. But, you talked about this working capital constraint, and you said that it is expected to be a constraint for a few months. And, of course, we're now, with the clarification that's come in this evening, talking about people who are transacting more than 7 lakh rupees per annum. But that is a concern that many have expressed, sir, that it will impact working capital needs and cause a burden as far as people and businesses are concerned.
Let me be clear. I use the term working capital erroneously. This is not working capital. This is not business. This is gifts. This is investments abroad. This is other forms of non-business transactions. These are personal remittances delay in getting your TCS back. But that's not if we are talking about large transactions, then I think that is something that is the necessity.
Yeah.
We have seen huge increases in remittances. The amount of remittances under LRS, particularly large remittances, are becoming significant at a macroeconomic level in the balance of payments. And so those who are either outside LRS limits through the use of credit cards, which has been happening, and therefore are not accounted for within the LRS limits, and those who have been incurring foreign exchange transactions without paying commensurate taxes, it is a legitimate aim to cover them, and therefore this is, I think, a reasonable step.
Okay, that's as far as the clarification that's come in on the 20% TCS imposition. There will not be a 20% TCS imposition on transactions below 7 lakh rupees per annum. Mr. Somanathan, there's another important development that's taken place this evening, and that is, of course, the Reserve Bank's surplus, 87,400 crore rupees coming in from the Reserve Bank to the government, significantly higher than last year's number.
Yes, it is. It is significantly higher than last year's number. However, it's not something that significantly changes our overall non-tax receipts position for the year. I think we are not expecting any significant change in the overall receipts of the government.
Yes, but that does provide ample cushion to you. And I also wanted to understand, Mr. Somanathan, we saw a cabinet decision yesterday, and that will result in correction as far as fertilizer prices are concerned. On balance, what does the food and fertilizer subsidy picture now look like?
It doesn't look any different from the budget estimate on February 1st.
No change on account of the decisions taken?
No. Yesterday's was a routine seasonal decision that's taken every year for the Kharif season, and it is something that it determines the particular levels of subsidy over a 6-month period. The amounts that were mentioned are not incremental to the budget. They are within this year's budget figures.
Okay. So, Mr. Somanathan, before I let you go, finally, you said that you cannot clarify at this point in time what happens post the 30th of September, and I would imagine that we will see more coming from the Reserve Bank in terms of FAQs. But, your message to people who are watching, we have been saying through the course of this evening that the 2,000 rupee note continues to be legal tender, so you can transact in the 2,000 rupee note as of tomorrow. This is not demonetization. Your message to viewers who are watching.
This is not going to affect the economy. This is a smooth transition. You have plenty of time to go, and banks will credit your accounts with these amounts, and they'll exchange monies at the counter if you wish, and you have till the 30th of September. There's plenty of time. This is not going to cause any disruption either in normal life or in the economy.
Mr. Somanathan, appreciate you joining us here to take us through the big developments that have taken shape this evening, starting with the Reserve Bank and then, of course, the two developments that the Finance Ministry has been party to as well. Appreciate your time, and thank you very much for speaking to us here on CNBC TV18. That's the Finance Secretary, TV Somanathan, on the decisions taken by the Reserve Bank as well as the government. Well, we will take a break here. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.
Join us as we delve into the achievements of CEAT's manufacturing facility in Halol for becoming the first global tire entity to be recognized with the Lighthouse designation by the World Economic Forum. Catch the special feature of CEAT, driving into the fourth industrial revolution, on CNBC TV18 at these times.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. let's do it right.
Samsung Solve for Tomorrow is a national education and innovation competition. This is your chance to make an impact for India. Don't miss the opportunity to win prizes. So join the Samsung Solve for Tomorrow today.
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
From navigating adversity to spearheading innovation, business leaders in India have been the architects of country's inspiring story of resilience and resurgence. Catch all the highlights from the 18th edition of India Business Leader Awards that honored these visionaries of India Inc. at this time, only on CNBC-TV18.
Presented by Standard Chartered. In partnership with Hindustan Times. In association with Reliance Industries Limited.
Dadu,
yes?
What does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ.
70% fires caused in India are due to electrical short circuits. How can these be prevented and suppressed? Find out on the Curtain Raiser episode of RR Kabil Presents Short Circuit Se Suraksha, only on CNBC TV18.
Presented by RR Kabil. Associate sponsor RR Parkon.
Zomato narrowed its consolidated loss by 48% yearly in Q4. The company said its business, excluding quick commerce, has turned adjusted EBITDA positive in the March quarter, driven by the food delivery business. Shilpa standing by with the key numbers for us. Shilpa.
Let me just quickly run you through the headline numbers first. Now, Zomato consolidated revenue from operations came in at about 2,056 crore rupees, which is up 70% on a year-on-year basis. The consolidated loss also narrowed nearly 48% to about 187.6 crore rupees. But the highlight for the quarter, especially according to the company, is the fact that Zomato, without the quick commerce business, which is Blinkit, has turned adjusted EBITDA positive for the fourth quarter at about 28 crore rupees. Now, the CEO, Deepinder Goyal, has said that they aim to make the entire business, including Blinkit, profitable in the next 4 quarters, and this will be at the PAT level. Now, food delivery business was adjusted EBITDA positive this quarter as well at 78 crore rupees. However, the slowdown which was there in the last quarter still continued a little bit into January, but the company says that it is seeing green shoots from February onwards, and this should reflect in an improved gross order value in the next quarter. This quarter, however, gross order value came down. Actually, it was down about 1% quarter on quarter. Even the average monthly transacting customers also reduced to about 16.66 million in the fourth quarter, as against 17.4 million in the third quarter. Now, Zomato attributed this mainly, this slowdown, to the fact that it had shut down about 225 cities which were low profitable or non-profitable cities for the company. The company also, in fact, commented on ONDC, which everyone's been talking about. It did say that it is watching the progress slowly and will learn from it. Now, finally, Zomato also strengthened its top tech after it saw a series of exits that came last quarter. It has appointed Rakesh Ranjan as the CEO of the food ordering and delivery business. Rinshul Chandra has been appointed as the COO of the food ordering and delivery business. And for Zomato Hyperpure, Rishi Arora has been appointed as the CEO of that business. Back to you.
Swiggy's food delivery business turned profitable in the March quarter, less than 9 years since its inception. This is after the company factored in all corporate costs, excluding employee stock option costs. Meanwhile, Instamart is on track to hit contribution neutrality in the next few weeks. Byju's has refuted creditors' claims of hiding $500 million via its US-based subsidiary Byju's Alpha. The company maintains that the transfer was within its rights as outlined in the Term Loan B agreement, which was intended for driving growth in its global operations. The edtech giant termed the allegation made in a Delaware court as bewildering, saying that Byju's Alpha is a non-operative US entity. Twitter has alleged that Microsoft violated an agreement over the usage of its data and declined to pay for it, as per letters seen by Reuters. Elon Musk's lawyer leveled accusations, and I quote, of unauthorized usage of Twitter's data by Microsoft, including sharing data with government agencies without permission. Twitter has reportedly asked Microsoft to identify all Twitter data the company possesses by the 7th of July. World leaders gathered in Japan's Hiroshima for the G7 summit, which kicks off today. The Russia-Ukraine war, US-China tensions and international trade will take center stage at the G7 high table on a day which began on a somber note as the Japanese Prime Minister, US President Joe Biden and other G7 leaders laid wreaths to honor the victims of the US atomic bombing in 1945. Prime Minister Modi also arrived in Hiroshima. India is among the invitees to the summit. In an interview to Japanese news portal Nikkei Asia, the Prime Minister said he wants to amplify the voices and concerns of the global South nations. Maria Shakil reports from Hiroshima on the significance of the Prime Minister's visit.
We are now inside the Hiroshima Memorial Peace Park. Remember, Hiroshima is a city which was completely devastated and destroyed in 1945. It was on August 6th, 1945, that an atomic bomb exploded in the skies above it. That structure that you can see, and I'll ask my camera person to pan and show to you, is locally known as Genbaku Dome. Genbaku, in fact, means atomic bomb in Japanese. This is the bell of peace. And if you look at what is written here, we dedicate this bell as a symbol of Hiroshima aspiration. Let all nuclear arms and wars be gone, and the nations live in true peace. May it ring to all corners of the earth to meet the year of every man, for in it throb and palpitate the hearts of its peace-loving donors. So may you too, friends, step forward and toll this bell for peace. The presence of Indian Prime Minister will become important because it will be here only that the Gandhi bust will be unveiled. Mahatma Gandhi, the biggest apostle of peace, will be established inside this park. Prime Minister Narendra Modi sending a message that yes, he is the first Indian president. The Prime Minister sending a message that yes, he is the first Indian Prime Minister visiting Hiroshima after the Pokhran nuclear test conducted by India in 1974. And remember, India is not a signatory of the Nuclear Non-Proliferation Treaty, which is the NPT. But India is a responsible nuclear power. So Prime Minister telling the world that this is not an era of war. Can Prime Minister Modi play the peacemaker?
Maria Shakil there reporting from Japan as the G7 meeting kicks off. IT layoffs and job uncertainty have been making headlines, but a new report claims that the 2021 Great Resignation wave never really ended and that an invisible revolution is at play in the minds of employees. Kanishka Sarkar joins us now. Kanishka, tell us more about this invisible revolution.
That's right. A talent trend report, Invisible Revolution, by global recruitment firm Michael Page has found that a whopping 98% white-collar employees in India are open to new job opportunities. You heard that right. The report goes on to say that with an invisible revolution at play, companies can only confidently rely on fewer than 1 in 10 people in their current workforce to be retained this year. But here's a catch. The huge number of employees looking for a change is despite the report suggesting that more than half the 4,000 people surveyed are satisfied with their job, salary and workload. This means employees may not necessarily switch because they're unhappy in their workplace, but simply because they find a better opportunity in another company. And this is why 75% of survey respondents say they are active job seekers, meaning they are looking for the right opportunity or plan to find a new job within the next 6 months, while 23% are on the fence but are open about finding a new job. Now, how can employers retain the talent? According to the report, benchmark pay, career progression, and flexibility are the top 3 factors that motivate talent to stay back or switch. But an important question here is, while 98% of employees look to switch, where are the jobs that they can go to given the current layoff scenario in place? Is it a practical ask? Michael Page India's MD, Ankit Agarwala, says that while layoffs are a reality today in some sectors, the report indicates a clear mindset shift in the employees to look for better opportunities, regardless of how realistic or practical the choice may be at the moment.
Layoffs is a reality today. There is a lot of uncertainty in the market around job security in some sectors. However, what our report indicates is that there is a clear mindset in the employees to look for better opportunities, regardless of what the realities are out there. So it may be realistic or practical for them to get new opportunities or not, but that mindset is very much there of always looking out for better opportunities.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC TV 18. Have a great weekend.